Jeffrey, how are you doing today? Here we go. 3, 2, 1, and now the time is here for us to get started with all this fun stuff. All right. Oh, go live. Here we go. Oh, look at this, 10 people here already. I'm just getting started. Just getting warmed up. Let's get ready to roll. Give me 1 second. Jeffrey, how are you? Tracy, back again. Oh, my goodness. I must have done something right. Got you back here tonight, didn't I? Anyway, let's see. What we got over here? What do we got? Who we got there? Oksana. Kagdala. Anyway, let's get ready to roll. Tracy's here. Gory. Jay Ducker. Okay. Joad, evening. Gamer, good evening. Steven, evening. CMCSA. Somebody wants to look at Comcast first thing this morning. Evening. Good evening, Comcast. We go right here. CMCSA. All right, some CMCSA getting ready to go. David, Phoebe, user 8581. What's happening? Tonka Tuber. That's a cool name. All righty. Well, let's get ready to get started. Holy cow! This time of day, I gotta change that thing, man. All right. Anyway, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, weekly cash flow from Hamburg, New York. Evening. Where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, I know some of you guys may be new here, maybe back again, I don't know. Now, I'm doing the exact same thing week after week after week, day after day after day after day, same thing over and over and over again for the past 15 years. Now, it's only been recently that I decided to turn a camera on and show you exactly what I'm doing. Because a lot of people saying, James, how the hell are you doing that? Well, here we go. This is how I'm doing it. All right, so let's take a look at some stuff. First and foremost, let's get out with the pleasantries. My name is James. Number one, we got a couple of rules here. It would be nice. Okay, now, when I say I get 1% per week, every single week on pre-qualified dividend stocks, those specifically are companies that have consistently increased their dividend payments to their shareholders every single year. Higher and higher dividends. It's just that simple. If the company's not at least 20 years old, that's 2 decades, I don't want to look at it. If the company doesn't have consistent profits, I don't want to look at it. If the company doesn't have dividends, I don't want to look at it. If it doesn't have weekly options, just a waste of our time. All right. WTRG, Austin. What the heck is WTRG? Sounds like a radio show. WTRG. All right, we'll take a look at it. Give me a minute. York Water, Austin. York Water is a monthly optionable stock. And Austin, you've been here long enough to know I don't do monthlies. The numbers just don't work. Tammy Marie Brown, how are you this evening? Anyway, let's get going. First one, we'll take thoughts on PI coin. I don't do cryptocurrency at all. No cryptocurrency. Nope. Sorry. All right. First thing we want to look at tonight is Comcast, CMCSA. All right. Let's take a quick gander at it. You ready? Here's the high of the year. Here's the low of the year. Look at where it was a year ago and look at where it is now. Now, Comcast got incorporated in 1964. This company's 61 years old, and they got over 64 million customers paying them every single month to watch television. Imagine that. All right, high, low, all that kind of nice stuff. Look at up, down, up. We're currently at 36 and change. Let's find out what that is exactly. 36 and change. 36.50. Alrighty, well, the 36.50 for this week, 24 cents. You're not going to get much. We got 2 days left. Thursday and Friday. You're not going to get a good covered call premium this week. So we're going to go skip this week. We're going to go right to next week, the 28th of February. Now, I do weekly options because when I say I'm looking for a simple, safe, predictable, consistent 1% per week, the only way I'm going to get that is through weekly stock options or sitting in front of the computer all day. Yeah, no. Sorry, don't do that. I don't sit in front of my computer. All right, so that being said, high of the year, 46. Low of the year, 32.50. We can trace the movement. It's really not that difficult. Okay, so it looks good. The numbers look okay. Look at this. 36.50, go for 47 cents. That's well over 1%. So that right there is a yes. So I'm looking for 5 things when I look at the chart. You ready? The high, the low. Where was it a year ago? Where is it now? And then number 5, I want to take my little finger and go like this. Up, down, up, down, up. Well, that's pretty plain and simple, right? You can't really mess that one up. Just follow the line. There you go. That's it. All right. That's the 1-year chart. It looks kind of okay. Okay, buy and hold. We're going to take a look at Caterpillar. We got that one last night. Colibri wants you to take a look at Kohl's. Kohl's and Macy's and Hasbro, HAS. All right, I'm going to pause the questions right now because we got about 15 stocks to look at from last night. So we didn't finish looking at them all last night, so we're going to take a look at those tonight, and then we're going to see, out of the ones you guys suggested yesterday, how do they look? All right, so let's finish up with Comcast first. All right. Year ago, 41. High of the year, 45. Looks like, yep, 45.22. We bottomed out at 32.50, and now we're sitting at 36.48. Well, look at the last 90 days. Okay, basically same thing, same 5 things. The high, the low, where was it, where is it? Look at the movement. Sideways down, now she's up. Alrighty, that looks good. Look at the last 30 days. Now, the last 30 days gives me a good idea of where do I think it's going to be. Where do I think it's going to be next Friday? Because when I say weekly cash flow, well, I want to get my weekly cash, the amount of money I want to make is going to be on Monday or Tuesday. That's when I do most of my trading. Okay, because when you're doing weekly options, all right, I'm doing covered calls. I'm not quite sure if you guys know what a covered call is. I sell options. And the reason I sell options and don't buy them is because 80% of all options expire worthless. So if 80% of all options expire worthless, why would I want to buy them? My chances of winning is 20%. I don't like that. I like the 80%. Okay, so if I'm going to sell an option, I have to know what it is I'm selling, why, and does it make sense? All right, so for you guys that are new here, the trading strategy I'm going to show you was created for my 9-year-old daughter. So let's take a look at her so you got an idea of who it was made for. All righty. And come on. Going to go take a look at YouTube, my website, my YouTube channel. This is on my social media. I got all that stuff. All right, let's go over to YouTube and see exactly who this trading strategy was created for. That way you guys have a better idea of what it is we're looking at. All right, it makes it easier to explain. Video is the oldest one. Here we go. All right, this always gives a good frame of reference.
Which my dad didn't let me call it that, but I do. Hi, I'm Jace.
Yeah, start it over again.
As you being part of my internet website called Thingy, which my dad didn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that will help you get the best return on your money.
20 days.
There's me. A long time ago, 15 years ago. I had so much hair back then.
That means every single day you buy a different stock. Every single day there's a different company
paying off dividends. Anyway.
I always laugh when I see that. All right, so let's put it to you this way. Now, I love my daughter. I do. Okay, but she was not the sharpest knife on the tree. Sharpest knife in the drawer, brightest bulb on the tree, however you want to look at it. But, to teach a 9-year-old how to trade, it had to be simple, safe, predictable, consistent, and no way for her to lose. So I came up with 5 rules to make it easier for her. Number 1, if it's not on the list, it's a no. So what did the list comprise of? Companies that are consistently profitable. So number 1, never buy something you don't understand. Number 2, never sell at a loss. It defeats the purpose. Number 3, make sure the company's consistently profitable. No shit, really. Company's not profitable. Why you put your money into it? You'll be surprised how much crap. Okay, now don't take this personally. I'm not talking to you specifically. But a lot of people out there, you'd be surprised at what they actually put their money. And it's like, what the hell are you thinking? Rule number 3, never buy something that is not consistently profitable. And you will. At least tonight, you should see 2 or 3 of them. You'll be thinking to yourself, what the hell is that person thinking? Rule number 4, make sure the company has weekly options. Because without weekly options, you're going to have to sit in front of your computer in order to make a weekly cash flow. I have no desire to do that whatsoever. So please, if you're going to suggest something for me to look at, make sure it has weekly options and dividends. It makes it so much easier. We can get through a lot more. You guys get a lot more ideas. Now, rule 5, make sure the numbers work. Well, what do I mean by the numbers? If I'm going to buy it, am I going to make my 1% every week? The numbers. What am I buying it for? What strike price am I selling? What premium am I collecting? Is that more than 1%? Great. That's the easiest part. Okay. Next, the chart. Is the chart telling me it's the right time to buy? I don't buy at the high. It just doesn't make any sense. I mean, think about it. When's the last time you heard somebody saying, hey, Comcast, it's an all-time high. Let's buy it and wait for it to go up. No. It's like when it's at the high, it's time to sell. Because stocks go up, stocks go down. Stocks go up, stocks go down. That's all they do over and over and over again. I've been trading for over 20 years. I've never seen a stock go straight up. Never. They go up, and then they come down. Then they go up, and then they come... All right, anyway. That being the point, that's about it. Okay, I don't want to buy at the high. I don't want to buy at the low. Because as she's dropping, she will find the bottom, turn around, and go back up again. That's where I want to jump in. I want to jump in. See right here? Here's the bottom. She turns around, goes back up. Here's the bottom, turns around, goes back up. Now, I'm not looking for a huge amount of increase. I'm only looking for a 1% profit every single week. Well, how do you think I get that? Well, there's a couple of, let's call it a recipe. The recipe kind of goes like this. Step number 1, mental. Because you are going to be doing things you never thought before. You're going to be doing things you've never heard of before. You're going to be doing things that are totally contrary to everything you have heard before. Because if you've been anywhere, it's always been annual percentage rate, annual return. I don't look at it that way. I don't live 1 year at a time. I live 1 day at a time. Nobody is promised a tomorrow. There's no guarantee you are going to wake up. Uh-oh, I got a co-host request. Liam, how are you doing today? Thank you, Liam. I don't invite anyone unless I've actually talked to them. Sorry. Eventually, I forget where I was. All right, I've been working since 1973. It's time for me to retire. I retired in November of 23. So, a little over a year. About a year and 4 months. Okay, fine. So, I got to keep something. I got to do something to keep my, keep myself busy. All right, so, step number 1, mental. Prepare yourself. Is this something I want to do? Because most people want to take all their money and give it to someone else and let them do it. There's nothing wrong with that. But if you do that, that person that you give your money to, banker, broker, investment advisor, or money manager, whoever, they do not have your best interest in mind every time they do something. And if they do, well, I haven't met a single one yet that actually has over, what is it? Nobody I've ever met anyone has consistently offered over 20-25% every single year. So that's step number one. It's a mental game. Thinking first. Can I do this? Am I willing to commit to do this? That's the big one. And then the changing of the vocabulary. Because you're going to hear stuff you probably never heard before. And then you'll be doing things you probably may not understand at first, but then as you see it play out, you're saying, oh, that makes sense. Because remember, what you are learning, now you're all over the age of 9, I'm assuming, okay? Maybe it's silly of me to assume, but as far as I remember, part of the logging on process of online stuff, you got to be a certain age. So my assumption is you're all over the age of 9. So if this trading strategy was created for a 9-year-old, I would like to think you could all get it. Because the number one thing for me is, does it make sense? You'll hear me say that a lot. Does it make sense? And if it doesn't make sense, don't do it. It's actually that simple. Gotta be one of the few people online not trying to sell you something. Now, do I have stuff to sell? Yeah, I do. It's in the bio. You want to look at it? Fine, it's there. Okay, wherever you're signing in from, because I broadcast over a bunch of different channels, wherever you're broadcasting, wherever you're viewing from, well, there is a, what do you call that? A bio for me. It gives you all the information, how to get in touch with me, what I'm all about, all that kind of stuff. Yeah, there's stuff there, but I'm not going to try to sell you anything. If you want to buy something, hey, go in the bio, look for it. Anyway, here we go. Number 2. After you figured out, yes, this is something I want to do, then you have to assemble a stock list of companies that you like. Now, why do I say that? Well, because there's 9,900, I think it was 18 or 16, some weird number like that, but over 9,900 companies that you can invest in at any time, any day. That's a lot to choose from. Okay, you can't possibly look at them all. And yeah, there are some AI out there that claims that they can go through all of them, and they probably can. I don't trust computers as far as I can throw them. I've actually seen the Terminator plenty times. So no, I don't trust computers. Pick your stock list. Me, personally, I like companies that are consistently profitable. Doesn't make sense for me to invest my money into a company that has not proven themselves. Now, you'll find throughout the night where people ask me to take a look at stuff, and I think to myself, what the hell are you thinking? Some companies that are less than 5 or 10 years old, I don't want to bother with them because they don't make sense to me. Okay, I'm not in this game to hit a reset button. Okay, once you get to a certain point in life, there is no reset button. This is it. I'm 61. The money I have has got to last me for the rest of my life. So I want to be safe. I want to be consistently profitable. And I want the trading strategy to be simple, easy, and quick. Okay? So anytime you hear me do a video, it's always, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. So do a little bit of research if you like. Look up the 10-Minute Trader. Okay? You'll see me there. Okay, and see how long I've actually been doing this. I got videos going back 15 years of me doing the exact same thing. Okay, the only reason you're seeing me live now is because technology is allowing it. I got me a couple of iPhones, old iPhones. I just press the button and boom, I'm live on a whole bunch of different channels. You should see, it's an interesting setup. I got 1, 2, 3, 4, 5, 6 iPhones right there. I got a computer, and I got a camera, and I got all that kind of nice, neat, fun stuff. And somebody said, hey, some good information, James. What do you got? Let's hear it. So a whole bunch of guys show up every single night listening to me. Okay, fine. Let me show you what I'm doing. And that's all I'm doing. I'm just showing you what I am doing. That's it. I'm not giving advice. If you think what I'm doing makes sense, well, fine. Try to figure out. Lena, how are you doing today? All right. Try to figure out what works for you. Now, I'm going to show you some stuff. It's either going to make sense or it's not. Okay, now I'm assuming you're here because you want to learn how to invest your own money and how to make some easy. I'm not going to call it easy money. It's slow money. I mean, it's slow. 1% a week is not that big of a goal. Now, when I say less than 10 minutes a day, well, if you don't have 10 minutes a day to change your life, I really can't help you. Now, if you think about it, do the math. 10 minutes a day equals 1% a week. Okay, doesn't sound like a lot, but at the end of the year, that's over 50%. And if you compound it, which means you keep taking the profits and reinvesting them over and over and over again, that's over 74% per year compounded. Okay, you could double your money in 14 months. Can you imagine that, doubling your money every 14 months? That's freaking awesome. Who else is doing that? I don't know. And here's the thing. It's safe. Because I did it for my 9-year-old daughter. Now, if you know anything about 9-year-old little girls, okay, if she loses money, she's going to cry. And guess what? Daddy's going to feel like shit. Okay, and then mama gets involved, and guess where daddy is? On the freaking couch. Yeah, no thanks. So it had to be simple. It had to be safe, consistent, predictable, all that nice, neat stuff. So, step number 1, mental preparation. Step number 2 is coming up with a stock list. Now, like I said, I like companies that are consistently profitable. You got 2 choices when it comes to consistency of profitability. Well, number 1, you could read all of the quarterly reports, annual reports, all that kind of crap. That could take a while. Or, I'm a lazy trader. I go straight to the dividends. And somebody else does the work for me. What do I mean by that? Well, I like companies that are consistently profitable. And the way to tell about their profitability is, hey Lena, is do they consistently increase their dividends to their shareholders every single year? Now, the reason I say that is a dividend is a portion of the profits. Okay, a portion of the profits that goes back to the investors. So if the dividends are getting higher and higher and higher, well, logic and reason and common sense will say the dividends can't go higher unless the profits are higher. Thus, I don't have to read read the annual reports. And what do I mean by someone else does it for me? Well, there's somebody out there, somewhere in internet world, who traces and follows every single company that pays a dividend. Specifically, those companies have consistently increased their dividend payments to their shareholders for 5 decades or more. And those are called the Dividend Kings. 5 decades of consistent profitability. Well, I like all of them. The next list, you have the dividend contenders, you have the dividend aristocrats, you have the dividend champions. Okay, between those 4 lists, and this for the fun of it, let's throw in Warren Buffett's list just because, if it's good enough for Warren, it should be good enough for us. That's just my philosophy. If you don't like Warren, don't look at the list. It's that simple. Okay, so with those 5 lists, Kings, aristocrats, champions, contenders, and Warren, those 5 lists should give you at least 300 different companies that are consistently profitable. Now, I'm not talking 1, 2, 3, 4 years. I'm talking 2 decades, 20 years. Okay, you decide what companies make your list and which ones don't. It's that simple. So once you figure that out, take all those stocks that you like so much and throw it into the calendar. Now, this is what is called an EX dividend calendar. Let me briefly explain to you what an EX dividend calendar is. Other than it being a calendar and telling us what month it is and what the days, other than that, these little green dots represents companies that are ready to pay out a dividend on those dates. Now, there's 4 dates to remember when it comes to dividend stocks. Date number 1 is the announcement date. That's where the company's representative comes out and say, hey everybody, this is James from Dividend Stock Talk, brought to you by 10-Minute Trader. This year was epic. We made a whole bunch of money, and this is how we're going to give it back to you. The announcement date. When they announce their dividend, they tell you how much the dividend is going to be and when they're going to pay it. Simple. They actually come out and tell you. Date number 2 is the EX dividend date. That is the important date. You might want to write that one down. EX dividend date. Now, that is the last day the stock trades before the dividend is paid out. Example, see this highlight right here? ED, okay, it's not erectile dysfunction, it's Consolidated Edison. Consolidated Edison has been increasing their dividends for over 50 years. They've been in business for over 200 years. Consolidated Edison, over 200 years old, and they still increase their dividends. If you want to collect their dividend, the EX date is the 19th. You need to buy the stock before the 19th. Shit, that's today. Anyway, 18th, 11th, 6th, 4th, 3rd, 10th, any day before the 19th, and you will qualify for the dividend. Now, date number 3, the date of record. Okay, now remember, days of old, long time ago. Okay, the EX dividend date, it was written down. People would write it down, and then they would take that book and they would give it to the accounts payable. Whoever owned the stock on the date of record was entitled to the dividend. Well, now it's a little bit different. The EX date and the date of record is the same day nowadays. It used to be 2-3 days apart. Okay, but now it's the same day. Date number 4 is the payment date. That's when you actually get your check. Okay. All right, so here we go with the list again. Number 1, think you can do it. That's the easy. That's the hard part. Okay, number 2, get familiar with the new terminology. Find your stocks. Okay. 3, throw them into a calendar. The calendar is going to tell you when each company has a dividend. Why is that important? You might ask, why is that important? Well, just before the dividend date, the EX date, right here, the 19th, stocks have a tendency to increase in value. So if the stock goes up in value, okay, ED, Consolidated Edison. Here's the dividend date right here. Look at that. Goes up in value just before the dividend date. Okay, by knowing the stock goes up just before the dividend date, we have a bit of information, valuable information. We know a stock is going to move and when it's going to move. Okay, great. Simple, easy. Now what do you do with that information? Some people want to buy the stock. Okay. Some people want to do some type of an option trade. Okay. Okay, how do I make it simple, easy, and less than 5 or 10 minutes? It had to be a simple strategy. Now, the safest strategy there is just buying the stock. That's the safest. Just buying a stock. Call up your broker. Say, hey, I want to buy a couple hundred shares of Consolidated Edison. That's the simplest and easiest. However, there's no profitability into it unless the stock goes up. There has to be some kind of action. All right, so I need something a little bit more predictable and a little safer. Hence, the covered call. Now, the covered call, basically you're buying the stock and then you're using a stock option contract to entice someone to buy it from you for the exact same price you just paid for it. Kind of doesn't make sense at all if you think about it. So let's go to the trade grid. Okay, all right, I'm going to change it from Consolidated Edison. Just pick a different one. All right. All right, now I'm pulling up Macy's just to give you an idea to try to explain it a little bit better. So here's the chart for Macy's. All right. Now, once you know a stock is going to go up in value just before the EX date, well, it's great information. What do you do with it? Well, some people want to buy the stock. I don't do that because the stock has to go up in order for me to make a profit. Well, how about this for an idea? Well, this stock right now is at $15.40. See it right here? $15.40. Okay, that's the current price. Now, for those of you that are new here and don't know this yet, okay, the screen behind me, this big, huge screen, that is broadcast live on YouTube. Okay, I have a YouTube channel called The 10 Minute Trader. Imagine that, The 10 Minute Trader. Anyway, this is live on YouTube. That way you can see these small numbers. Because you probably can't see these small numbers on your phone or your iPad. But on your big screen TV in the other room or at home or wherever you are, big screen TV, you get a better idea of what numbers it is I'm pointing at and what I'm looking at. Okay, so that being said, if I buy the stock first thing in the morning, I'm paying $15.40. Okay, that's the number. Can't really argue with it. Now, if I buy it for $15.40, I want to immediately, I actually want to do two trades at once. I want to buy the stock and sell the contract for the option at the exact same time. And that is a covered call. We're going to be doing a few of those tonight so you get an idea of what it looks like, what it sounds like, and how to do one yourself. And if you have any questions, it's all going to be recorded so you can go back on YouTube and look at it again. And no, it's not pre-recorded. This is live at this moment in time, being 9:48 p.m. on, what is it, Wednesday? Wednesday the 19th. Yeah, Wednesday the 19th. All right, anyway. That's one of those things that happens when you retire. You sometimes forget what day it is. I do that a lot. All right, anyway, 1540. So if I buy it at 1540, I'm going to find the strike price, which is part of the equation of the covered call. Because if you didn't know, a covered call is a legal binding contract. You need four things in a legal binding contract. One is beginning date, ending date, consideration, money, and then meeting of the minds, which means you both got to agree on the same thing. Well, in this instance, we're agreeing on somebody buying a stock from me at a certain price by a certain date. That's the agreement. All right, so 1540, the closest one is going to be the 1550. It's going for 26 cents. Now, I don't know about you and how your math is. The simplest and easiest way to figure this out, simplest and easiest. Are you ready? 15.14. That is the current stock price. That way I can buy it for. You take the decimal point and you move it over 2 spaces to the left. That's how easy it is. So 1% of $15 is 15 cents. It's that simple. If it was a $5 stock, okay, then it would be 5 cents. If it was a $500 stock, it would be $5. So whatever the price is, 15.40, you move the point over 2 places, it's 15 cents. 1% of $15, 15 cents. Okay, so that's the numbers, how the numbers work. So if I buy the stock, the current price, sell the covered call, which means I'm selling somebody the rights to buy it from me for just a little bit more than I just paid for it. So what am I making? 10 cents? Okay, if I buy it at 15.40, sell it at 15.50, I'm making 10 cents? No. Okay, I'm making 10 cents plus 26 cents a share. So that's going to be 36 cents per share. So each contract is 100 shares. So one contract, 100 shares, 10 cents from the stock, 26 cents from the option. That's 36 cents altogether. That's $36 for each contract. We're going to do one so you can see how the numbers actually work. So basically, I'll be buying Macy's, let's say 100 shares, $15.40. I'm going to sell the rights to someone to buy it from me at $15.50. Okay, does the stock have to move up? Nope. The stock doesn't have to do anything. I'm still going to collect that 25, that 26. Okay, whether it moves or not is irrelevant. As soon as I decide to sell that and somebody buys it, I've already made my more than 1%. If, by chance, the stock is above $15.50 on the 28th of February, because that's the option I'm selling, if it's above $15.50, then the following Monday I get all my money back and I still get to keep that 1 or 2%. Okay, so the stock doesn't have to do anything. Remember, simple, safe, predictable. I know exactly what I'm going to make before I even do it. Consistent, simple, safe, predictable, consistent. Consistent, I can do it every week. 21 February, that's this week. 28 February, that's next week. 7 March, that's the week after. 14 March, that's the week after. 21, that's the week after. 28, that's the week after. Every single week. Why won't I do that? Why wouldn't you do that? If I can make 1 to 2% every single week for 5 to 10 minutes a day, why the hell not? Now, you might be asking, why am I doing this? Well, I'm definitely, now don't take this the wrong way. I'm not doing it for you. I'm doing it for my children and my grandchildren. Now, every once in a while, one of my kids will actually jump on and watch, okay? And I get to see them log in. But I'm hoping, okay? Now, they're all in their 30s. I think my oldest son is 35. He's just starting to learn about money and investing and the importance of it. So if something happens to me, I will have 15 years worth of videos showing him exactly how I get over 50% every single year. Because my kids always say, Dad, my friends ask me, what does your dad do? Well, we always say, we don't know. Because they have no idea. I don't have a regular job. I never did. Okay, I had my own manufacturing company. I sold it when I got divorced. One of those. Anyway, so hopefully that helps out. Let's finish up with this example. Wait a minute, we didn't even finish Comcast, did we? Anyway, so that being said, simple, safe, predictable, consistent. The covered call is one of the safest and easiest strategies there is, and the stock doesn't have to do a damn thing. So if you buy the stock expecting it to go up, yeah, you have to wait for it to go up. And then it's a very tough decision. Where do I get out? Well, the covered call is simple. I buy it and I sell it for the exact same price. I collect my 1 or 2% every single week. Now, it's not exciting. It's not a shiny object. It's not the hottest thing around. But what it is, predictable, consistent, and it gives me over 50% every single year. And there's hardly any work at all. And you'll notice, I have all my trades for last year, 2024, posted online. Give it a second while it loads. Okay, the10minutetrader.com is my website. Here's all my trades for last year. Just pick one, click on it. This is the third week of November. Apple, Walgreens, MPW, Harley-Davidson, Home Depot, Kohl's, MPW, Apple, MPW, Home Depot. Okay, so what did I make that week? So that week, I only made 0.9. 2,500 only made 0.9% that week. Boo-hoo for me. Now, do I make 1% every single week? Every single week? No. This week made 0.9. Well, look at this one. 3.12. The exact same week. Just different trades. Okay, different accounts. Harley-Davidson, Intel, Walgreens, Macy's, Mara, Riley, Advanced Auto Parts, Riley, and Harley-Davidson. Okay, that one account. Okay, that one account right here got 3.12 for that month. And this one, that week. This one only made 0.9%. I haven't finished up the math on this one, but I'll get to it. So that being said, simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks, and those are companies that are consistently profitable for more than 2 decades, bare minimum, and weekly options. Okay, so let's continue. Let's start answering some of these questions. Antonio, what's happening? Okay, buy and hold. We're going to look at Caterpillar. Sam, more energy too? I'm not quite sure. So many good premiums on my roll, but now I'm bored for the week. Dude, Paul, I'm terribly sorry, dude. Just in case you know, Paul is one of the people in the morning trading group. Terribly sorry, Paul, that you're making money this week and you have nothing to do today and tomorrow. But Friday, there will be something for you to do, okay? And yeah, get used to it. It is kind of boring. It's the same thing over and over again. Antonio, hello. Sam, thank you for sharing. You're welcome. You only put trades you make money on? Oh, hell no. I put every single trade up there. I got trades up there where I lost money. But here's the thing. Okay. 1.6 for... Let me get my glasses. See, the funny thing here, who said that one? Habiboo, you only put the trades you make money on. No. I put every single trade up. All right, let's take a look. This is week 43. Week 42. Nope. Ooh. No. Funny thing is, all right, so I'm looking for one that I lost on, but the funny thing is, I only lost 1 week last week. 52 weeks, only 1 week in one account. I have seven accounts. 7 accounts. Only 1 week that I lost money last year. Other than that, every single week was profitable. 2.3, 17, 1.4, 7, 3, 1.2, 0.5. Look at that one. That one's horrible. 0.5 that week. Only made 0.5% that week. But look at here. 2.5 over here. 2.3, 2.8, 2.06, 2.6. It's here somewhere. 3%, 4.3, whatever. We'd be sitting here all day doing this. But yeah, I post the winners and the losers. Every single trade I do, winners and losers, I post it. I'm not hiding anything. I'm not selective. Okay? If I'm going to win, I'm going to win. If I'm going to lose, I'm going to lose. I'm going to be honest with you. All right? I show you everything I'm doing. And it's everything I do is recorded. So, oh, baby, here's something for you. Every single one of my recordings, that means podcasts, every single trade I do it. Now, ever since, wait a second, I'll show you this first. Okay, see, I started sharing what I've been doing back in 2011. My very first entry on my blog post. Remember when blogs were a big thing? Back in the, 2009, 2008, 2010. Anyway, 2011 is my first entry right here. Okay, here's 2013. Anyway, you can go and look at all that stuff. Let's go all the way up. All right. So when I say every single thing I do is recorded, all right? So go to videos, my website, the 10-Minute Trader, the videos. All right, see right up here? There's 887 videos. 887 videos. Yeah, I've been doing this for a while. Now, I deleted a whole bunch of them because there's way too many there on my page. But you go to the oldest videos, and that goes all the way back until 12 years ago.
Which is the top 5, which are Hi everyone, this is JC from 10-Minute Trader, and let's do some trades. First we'll X out of the screen right here because we don't really need it. We're going to go over to our calculator.
Alright.
And over here in the 10-year performance column, we're going to look at the ones that are 80% or higher, which is the...
Alright, so that being said, I have been doing this for a while. That's basically all I wanted to show you. Okay, all my profit and losses, year to date, right there, all 3 different accounts. Okay, profit and losses. Remember I told you I have 7 accounts and I share 3 of them with you? Okay, they're right there. Every single trade I made, the winners and the losers. All right, let's get back to here. Let's get back to business. All right, let's answer some more questions. All right, where was I? All right. So, Habibu, hopefully that answered that question. With one covered stock call every week, I can make a profit from one covered call, or do I buy another covered call each week? Hey, Antoine, you're new here. Okay, just sit back, relax, just watch what's happening. It's not a sprint, it's a slow race. Okay, take your time. Okay, the stock market's been around for over 420 years. It ain't going anywhere. All right? How much in a year does it add up to around 20%? No. 1% a week is over 52% per year. Simple interest. Compounded, it's over 74. James, on your Robinhood account, is that a Roth IRA? No, it's not. What broker or platform do I use? Okay, at this moment in time, what you're seeing here is Think or Swim. Charles Schwab. Okay, now you can use Charles Schwab trading account, or you can use Think or Swim. Now, Think or Swim was bought out by TD Ameritrade 20 some odd years ago, and then TD Ameritrade was just recently bought out by Charles Schwab. So now Charles Schwab owns this. But I've been using the exact same trading platform for over 20 years. I think that's awesome. 15 years ago, I wrote a book on choosing the right trading platform. It ain't that glamorous. It's a very short book, about 35 pages. That's it. It's an ebook. Anyway, so let's keep on looking. That's it for everyone on YouTube. Now let's go over to TikTok, see how many questions we have. Hasbro, we're going to take a look at that one. Yield Max. I love when people ask me about Yield Max. Okay, let's keep on going. Keep on going. York Water. Nope. Kohl's. Macy's. Fiasco Dasco. Yield Max. I'm going to say no to Yield Max because it's not even 10 years old yet. I don't think. But I'm pretty sure. All right, Austin, I have 21 more to go next month. Okay. Congratulations. All right. We talking about how to calculate 1%. Oh, okay. How to calculate 1%? Very simple. Okay, you take the $15.33, $15.33, 1% of $15.33, 15 cents, 15.3. Right, NTR. We'll take a look at that one. Flag fishing. All right. Love from North Korea. Well, hello over there in North Korea. Do you need to log on every day to be successful with this strategy? Now, Golden Log Group, let me ask you a question. Now, if 1% every single week is too much for you or not enough for you to spend 5 or 10 minutes every single day, well, you might be better off just giving your money to a money manager or investment banker or something like that. If you don't have 10 minutes a day to cultivate your money or to keep an eye on it, I don't know what to tell you. It's 10 minutes a day. You're adding just one more thing to do in the morning. Okay, do it while you're on your stationary bike. Right? I have no idea. If you can't figure it out, there's got to be someone. T. Smith, he loves Google. Not really. Bro, reading Chat GPT script? No, I don't do Chat GPT. You got to be new here to ask me those kind of questions. Paul, all my rolls were great premiums this week. Now I'm bored. Sorry, terribly sorry there, Paul. Hi, Rizzo. Can you enter an option? I'm not understanding it. Can you enter an option? Hi, Rizzo, how are you doing today? This is like your third day here, okay? Just chill, relax. Don't be such a hurry. It'll come to you. Jay Cordero, hello. James Brochi, evening, James. I also call it Wally World, by the way. That's the correct name. Hey, it is what it is. Essential utilities, 31 times in a row. Austin, I'm not quite sure what you mean by that, but okay. Year 2055, I slapped 10 to 15K in call. I have no idea what that means, but all right. I like simple, easy questions, not statements. Statements don't really help me out any. Can you sell right after the EX date and still collect? Yep. Okay. Dr. Fauci, 2001. Okay, Trumpet Man 10, I have no idea what that means. Can you repeat the steps, please? Step number 1 is understanding. Thinking that you can do it. Changing your mentality. Changing your way of thinking, because you're no longer investing for annual returns. You'll now be investing for weekly returns. Crazy. Nobody ever talks about weekly returns. Nobody even talks about monthly returns. Quarterly, yes, but weekly? No, nobody ever talks about that. That's step number one. Step number two is collect a list of stocks. What companies do you like? Me? I like the Dividend Kings, Aristocrats, Champions, Contenders, and Warren Buffett's list. 5 lists. Throw them into a calendar. The calendar will tell you when they're getting ready to pay their dividends. And you buy it just before the dividend. Okay? I like 2 weeks before. It gives me plenty of time for the stock to go up, make my quick little profit, jump ship, and move on to the next one. Why? Because every single week, let's get out of there, let's get out of there, let's go here, and let's go there. Okay? Every single week, look at them all. Now, it may not look like a lot, but here, it looks like there's only one. No. Because, see, you don't have the big screen TV. You can't see. That's 45. 45 companies on the 31st. 40 companies on the 7th. 100 companies on the 14th. 32 companies on the 21st. 109 on the 28th. 59 on the 18th. 36 here. Nothing on the 17th. Why? It's a holiday. Okay, 37 on the 10th, 39 here. There is a whole bunch of companies paying a dividend every single week. So once you weed out the losers or the ones you don't want to invest in, it should be a little easier. Okay? Now, I only look at between 10 to 15 stocks a week, and it's really fast. Now, I'm going to go through the list. Okay? Like I said, I don't like computers, so I write stuff down. So we're going to go through this list right here. It's about 15 companies. We're going to go through them real quick, and then we're going to open it up for questions again. To sell a call, you have to own 100 shares of a company. Now, Austin, to sell a call, there's a huge difference. Terminology. Remember I said step 2 is the new terminology? Yeah. If you're doing a covered call, you need 100 shares of stock first before you can sell one covered call. Now, to sell a call, the way you have it written in that question, it's level 5, which means selling a call without anything to back it up. Yeah, no, you can't do that right away. You have to have quite a bit of experience, and you have to have quite a bit of money to do what is called selling a call with nothing else backing it up. Okay, so the terminology is going to be important. So you skip number 2. Next question. If Macy went to 13, what price calls are you selling? I don't know. Let's go back to Macy's. Back to Macy's. All right, so currently Macy's is at 15. All right, if I buy it first thing in the morning at 15.40, and who said that? Okay, Tim. Tim wants to know if Macy's goes from 15 all the way down to 13, which is not even on this chart, it's way down here, what price would I sell? Well, I wouldn't be selling the 13. That's too close. It all depends on odds and probabilities. Okay, is the stock still dropping to 13, or is 13 the bottom and turning around going back up? There's a lot of ifs, ands, and buts there that you haven't taken into consideration. Okay, is it still dropping? Has it turned around to go back up again? There's a lot of interesting things. But yeah, each and every time I make a trade, mathematical equation has to happen. What did I buy it at? Where is it now? What did I sell? And these things really aren't that difficult, because right now I know Macy's is at 15.33. I can buy it at 15.40. Okay, the 15.40, I would sell the 15.50s, pick up more than 2 or 3%. Lovely, wonderful. When Friday comes, I will deal with Friday's situation when Friday gets here. So I'll quote the great John F. Kennedy, who once said, "Cannot answer the questions of tomorrow with the knowledge we possess today." So, at this moment in time, the stock is at 15.40. I cannot tell you what I would do when the stock hits 13, because there are a lot of other factors that fall into play. Okay? So hopefully that answered that question. Let's do a few more before we actually look at some stocks. Do you still sell options? Yes, I do. Even the stock goes up and up. Yep. Until it is taken away from me. So if I buy this here at 1540, and I sell the 1550s, and the stock goes down, well, I will continue writing covered calls every single week until it hits my target. Well, what's my target? It's the exact same if you're just buying the stock. Because if you buy the stock tomorrow, just the stock itself, you have to think in your head, where is your exit? Because just buying it doesn't mean anything. You need to have an exit strategy. You should always have an exit strategy before you buy anything. Well, a covered call is simple. I'm buying it at 1540, I'm selling it at 1550, and I will continue every single week to try and sell it at 1550 until it hits my target. Plain and simple. I'm buying it at 1540, sell the 1550s, and I'll do it every single week until it hits my target. It's not that difficult. Okay? All right, next. On Monday, my contract option fills. I immediately get my premium. On Friday, how do I know if I will exercise or will need to roll forward? All right, KK, I'm not 100% sure if you're in the morning trading group or not. But I just said we do not know what's going to happen at 2:30, 3 o'clock on Friday afternoon until Friday afternoon gets here. Okay? We know a few things. All right? Number one, we know where we jumped in. In this example here, 1540. We know what strike price we sold the option for someone to buy it from me. The 1550. That we know. Okay? We also know that Friday at 4 p.m., those options are going to expire if they have no value to them. See, we know all this, but what we don't know at this moment is where is the stock going to be at 3:30 on Friday afternoon. At that point, that is decision-making time. That's where you say, hey, the buck stops here. I got to make up my mind. Shit, get off the pot. Either way you want to look at it. I don't know the answer to the question without having the information in front of me. And we're not going to have the information in front of us until 3:30 Friday afternoon. Sorry. Next question. That's great. Let's go. Where do I join the group? Wally, or is it Wallace? Wallace True. Okay, Wallace True. Right up here, okay, you'll see is the bio. Which you click on that, DM me your number. I'll give you a buzz. We'll chat. If not, you go right to the 10-minute trader and join up there. I'm not, like I said, I'm not trying to sell anyone anything, okay? But if that's where you want to go, that's where you want to go. Robbie, stock goes up, then it goes to the bottom and back up, and then lower. When it goes up, the stock remains. The options are of value, but we don't know where the stock is until it's at the high, blah, blah, blah. Wait till it goes. Okay. What are some good dividend stocks? Okay, Paul, you get the Dividend Kings, the Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google and enter into the search Dividend Kings list, Dividend Aristocrats list, Dividend Contenders list, and it'll give it to you right there. Those are the stocks that I like, that I trade, because they're consistently profitable. KI Rizzo, yield max is risky. Yes, it is. One of the reasons why I don't buy it. Show an example of loss. Why there? I have no losses at all this year, so I have no idea. I'd have to search. You do realize 266 trading days last year, and I just told you I only lost once or twice last year. And you want me to go through each and every single one of them to find a loss for you? Yeah, I'm not going to do that. Trust me, I did lose last year. As a matter of fact, I lost 3 times specifically. Now, I always say most newbies are going to lose by hitting the wrong button. I hit the wrong button 3 times. Okay? Now, I also lost money when we had the hurricane last year. I don't know if you remember that. Okay, here in St. Petersburg, no water, no electricity, no cable, no telephone, no nothing for 4 days. So no, I could not trade, and I could not. So I lost like 20. I think it was 2,500, 3,500, because I couldn't get online. Okay, if you remember, the hurricane, I believe, was on a Thursday, Wednesday or Thursday, but there was no electricity. Wednesday, Thursday, Friday, and an option. I had a bunch of options. So I'm driving up and down the road, trying to find cell service so that I can make my trades. So yeah, Alexa, lower. Alexa, lower. Good, thank you. Whoever apologizes to a computer. Anyway. Papa Laos. So mad I missed DVN trade this morning. Sorry, dude. We looked at it this morning. TikTok, James, did you figure out the P&L on Think or Swim? What happened to the other 200 CVS? Just curious. Actually, no. Haven't figured it out yet. Because the funny thing is, after I got off that call with you guys, I went outside and worked on my aquarium, and I went and applied for a passport. Plan on doing some traveling this year. Don't worry, even when I'm traveling, I'm still going to be broadcasting. I went to Vegas a couple months ago, and in the Vegas hotel room, I broadcast in the Vegas hotel room. Last year, you may have seen, I went up to Maine for a week, and I broadcast every night from Maine. So I broadcast every day. Well, except for Friday and Saturday. All right, let's continue. What's the calendar called again? Austin's called an EX Dividend calendar. Okay, so TikTok, I will eventually try to find out what happened to those 200 shares of CVS. Because I'm curious too. But I have to go to charlesschwab.com. Okay, I don't really know how well to navigate charlesschwab.com. I know how to navigate Think or Swim because I've been using it for 20 years. But Charles Schwab just recently bought TD Ameritrade. So I got to figure out how to use that one. Not that I use it that often. Oh, top that baby. What's the highest return I've ever made in a week using my 1% strategy? I think it was 41%. Crazy. I didn't plan on doing it that way. And does it happen all the time? No, it hardly ever happens. But on average, it's 1.2% on average. Okay, there are some weeks where I made 5%, 8%, 11%. I mean, one week I made 18%. Then there was that crazy anomaly, 41%. That was nuts. Okay. Essential upped their dividend 31 times in a row. Okay, Austin, thank you for that. But I would need to get their ticker symbol in order for me to look it up. What are some good dividend stocks? Thanks, James. Blah, blah, blah. Laura, which stocks give me dividends even I don't see every week? Okay, Laura, this strategy here basically is not for you. If you can't look at your account every single day, every single week, then probably not. Now, I'm pretty sure you probably check your email every day. You probably check your phone messages every day. If you can't check your money every day, you're going to have a great social life, but your finances aren't going to be that great. Give it to someone else. Let them do it for you. That's about basically all you're going to be able to do. If you can't commit to take care of your garden, the weeds will take over. If you hand it off to someone else, then you're going to get what they give you. Okay? Nobody has more interest in your money than you. And by you saying what you just said, sounds like you don't have very much interest in your own money. Okay? If you can't look at your finances every single day, then you shouldn't be investing. Okay? Give it to someone else. Okay, give that responsibility to someone else if you cannot commit. It's like, do you commit to eat healthy? Oh, here's a good one. Do you commit to being clean? Like, do you like to take a shower every day? Most people do. So why can't you look at your money every day? It's not that difficult. Okay, and it doesn't take that long. It should take you 5 to 10 minutes. That's it. Okay, it's a simple trading strategy created for a 9-year-old little girl. It had to be simple, safe, predictable, consistent, and no way for her to lose. Okay, that's the what I created specifically for her. All right, anyway, let's keep on going. for the following week. What percentage of your trades would you say are executed beginning of the week versus mid-late week next week? Now, every once in a while, I'll get something called away where, hypothetically speaking, let's say Macy's, where I bought it down here and it goes up. As it keeps going up, I will keep writing covered calls against it, but eventually it gets so high, I'll just let it go and then move on to another one. Because what goes up always comes back down again. So at that point, I want to let it go. Let it go all the way up. Say, buy it low, keep rolling. Okay, once it gets to a certain top, then it comes back down again. That's when you let it go. You still collect your 1% every single week, but then you take a pause, like Macy's. I'll sell it at the high. I'll buy it when it's low. I'll sell it when it's high. I'll buy it when it's low, and I'll keep doing it over and over and over again. It's all about the numbers. Okay. If the number tells me I'm going to make my 1% this week, fine, I'll do it. If I can make 2%, great, I'll do that too. We haven't looked at very many stocks. You guys have too many questions. So just look at the 1%. What about the delta? Oh, Francis. Not very many people ask me about the Greeks. Every once in a while. It used to be like once a month. Then it dropped off to like once every 3 or 4 months. This is the first time anybody's asked me about the Greeks all year. Now, the year's only we're in week 7, week 8. So I haven't had anybody ask me about the delta in 8 weeks. So let me ask you this question. Do you honestly think a 9-year-old is going to understand the Greeks? The answer is no. 9 years old, I didn't explain to her about the Greeks. I did not explain to her about the Black-Scholes pricing method for the options. There's a lot of things I didn't explain to her. It's simple math. Simple math. Am I buying it? $15.40. I'm selling the closest one, $15.50. It's giving me more than 1%. Then it's a yes. It's that simple. Once you start throwing in the Greeks and the pricing methodology, it's no longer simple. Okay? Adults have a tendency to make everything complicated. It's a strategy created for a 9-year-old. If you can't grasp it, give it to your children or your grandchildren or your nieces and nephews, and they'll do it for you. They'll probably be a lot better. Coach, what's happening? Flat screen is not fully visible. It looks fully visible to me. That's the edge right over there. Here's the other edge right over here. All right, let's keep on going. Please show losing trade. A losing trade. Jesus, why does somebody want to look at a losing trade for? Holy shit. Somebody wants to take a look at a losing trade. All righty. That's week 52. That ain't it. Oh, I think it was week 19. Week 19. Because my son was saying he was having trouble with the math. Week 19. Week 19. Oh, there it is right here. 0.5. No, that wasn't a losing trade. 0.8. 0.8. 0.1. 4.2. 0.4. 0.9. 0.6. All right, losing trade. 19. Where is it? Right here. Where the hell is it? There it is, right here. Abelmal. Okay. Abelmal went down. All right. So I bought Abelmal a while ago. I don't even know when I bought it. But here, I had to buy back 4 options. So I lost, what is that? 4 options, 400 and something. Then I had to sell my Abelmal at a loss. Okay. You want to see a losing trade right there. Week number 19, account number 2. Okay, I did make 0.57% that week, which is 0.5%. Now, 0.5% every week is 26% per year. So did I really lose? Well, yes, I did. Because I bought it at a certain price, sold it 124. See, I had to buy back the 124, sell it at 33. Yep, So that's my only losing trade that I know of off the top of my head. Let's get out of there. All right, let's get back to where we were. Let's start looking at some stocks. This is silly. All right, so that's it. WTGR. All right, well, let's look at WTGR. I have no idea what it is. WTGR. Let's try it one more time. WTGR. West Gold. Okay, Austin. Okay, WTGR. We can't find this symbol. So I'm not 100% sure there, dude. You got to give me a symbol that I actually work with. All right, so that being said, we're going to go through the list. Okay, here's the list right here. Right there, we're going to go through this list right there. So, first one on the list, T. Rowe Price. T. Rowe. We're going to say no to T. Rowe Price. The reason being is this is a monthly optionable stock. No, I don't do monthlies. The numbers just don't work. Next on the list, U.S. Steel. Okay, U.S. Steel. High, low. Where was it? Where is it? Look at it. Down, sideways, down, up, sideways, down. 39.04. 39. The 39s are going for 128. That is over 3%. If you like U.S. Steel. Now, I do own some U.S. Steel. Just in case you're wondering. Can you mirror the video, please? It's hard to understand what I'm looking at. Pyro, I would love to be able to do that. My suggestion to you, if you're having a difficult time, go over to TikTok. Because TikTok is the only camera that I know of that allows me to mirror the image. Here on YouTube, I have no idea how to do that. This is just a hobby. This is not a profession for me. Okay? And so, if I had like an AV group, it's just me by myself. So, I don't know how to do it. If you know how to do it, come on over and do it for all of my cameras. I got 7 cameras going. And I only know how to do it on one. Sorry. All right, so U.S. Steel, you got to ask yourself the question, do I like U.S. Steel? Well, currently U.S. Steel is at 39. I bought U.S. Steel at 41 a couple of months ago. But here's the interesting thing about U.S. Steel. I've been getting over 1% every single week since I bought U.S. Steel. All right, here's U.S. Steel. I bought it at $41.25, but this week I sold the 32 calls, and I got $6 per share. Okay, but I pushed out the expiration date for next Friday. So eventually, next Friday, I'll roll that forward again and pick up some more premiums. But I bought this back in the beginning of December. See, 12/2. Okay, that was December, January, and almost all February. It's almost 3 months, which is kind of a long time for me. All right, so U.S. Steel. High, low is, look at the direction. Okay, currently we're at 39 to 39, right there, 128 per share. Now, remember I told you we're going to do a couple of samples? Let's do one on U.S. Steel. Okay, the high of the year was about a year ago, 48.17. The bottom of the year was in the beginning of September, 26.87. So it's almost a 50% drop. Close, but not quite, but close to a 50% drop for the bottom. So the distance between the bottom of the year and the top of the year is almost 50%. Okay, the last 90 days, here we go. Okay, 90 days ago, there's our top at 41. Our 90-day bottoms right there at 29. Last 30 days. Okay, look at that, last 30 days. 30 days ago, we're at 36. Shoots on up, we're at 39 right now. So, the 39 is going for $1.28. So let's see what that looks like. Let's get rid of that. Let's change this right here to a covered call, because that's one of the safest trading strategies there are. Look at all the different strategies. Do you want to be confused? Start learning about those. Stick to one strategy, and once you perfect that one strategy, then move on to the next one. Because if 50% a year is not enough for you, I can't help you out. The 39 right here. So I want to buy the 39 right there. I want to change it to just one contract, because I don't want to show you 10 because you might freak out because of the numbers. Okay, market order, confirm and send. Here's what it sounds like. Now, I always tell people, read it out loud, because by hearing it, you may hear something that you don't see. All right? It's very important. Buy one covered call of X, which is US Steel 100s, that's the weeklies, 28 February 25, that's next Friday. So whoever buys this from me has between the moment they pay for it and to the expiration date, which is 4 p.m. Friday the 28th, next Friday. The $39 call, X at the market to open. Here's my profit right there, $136 per contract. Now, remember when I said simple? Well, the covered call is one of the simplest. It's the second easiest strategy. The easiest, just buying the stock. No profit there, but that's the easiest. A covered call is buying the stock, selling the option at the exact same time. Now, when I do that, I know what my profit is. Remember, simple, safe, predictable. I know what I'm going to make before I even do it. Now, before I do it, I'm going to bring up the calculator to show you exactly what the rate of return for 1 week is on US Steel. Consistent. Well, the options for US Steel every single week means I can do it every single week until it hits my target. Oh, my target here is 39. Well, currently the stock price right now is 39. So what has to happen? It's just got to stay where it is or go higher. As long as it is above 39 or above next Friday, I'll be having all my money back the following Monday, and I get to do it again with a different company. Or I can just keep US Steel and roll it forward. Now, I'm not going to explain the roll here. It's not that difficult. Buying back this one, selling next one. It's not that hard. Okay? So, that being said, let's get out the calculator and see what kind of rate of return this would be for US Steel. Now remember, never buy something you don't understand. So if you don't understand US Steel and what they do, well, they make and process steel. Profit right here. Maximum profit, $136.50. $136.50. Now to find out what your profit's going to be, you take the percentage. You take the profit and you divide it by the investment. Okay, so if my profit's $136.50, my investment is $3,764. $3,764. And that comes to a grand total of 3.6% for 1 week. Now, do you have any idea what 3.6% for 1 week is coming out for the whole year? Remember, there's 52 weeks in a year. 3% every year, every week. Well, 3.6%. I'm going to say 180. Is that right? So we take 36.36, multiply it. Damn it. 136.50 divide 3,764 equals 3.6. I'm going to multiply that by 52. Because if we can get this every single week, I'm saying 180. Oh, 188. I was close. That was in my head. All right. So that's 188% if I can get 3.6% every week. Well, I can't get 3.6 every week. I do on some stocks, but they kind of offset the ones that don't make 1%. So do I make 1% every single week on every single position? No, I don't. Some of them are higher, some of them are lower. Now, every once in a while, I will hold on to a stock longer than I would like to. So that's why I say never buy something you don't understand or you don't want to hold on to. So that's U.S. Steel. Let's go to the next one. Get out of there, get out of there, get out of there, get out of here. And let's go back to here. Next on the list, RSPT. What the heck is RSPT? RSPT. It's a no is what it is. AMD. Advanced Micro Devices. I'm going to say no. The reason I'm saying no to Advanced Micro Devices is, well, at the moment they're having problems with some questionable bookkeeping. Okay, in the news. Yeah, no thanks. I don't want you involved in that. Also, they don't have 20 years of increased dividends. They do have some dividends, but not 20 years. Maine. Isn't Maine a monthly? MAIN. It is. Maine's a monthly. No. And it's at the high of the year. No. I don't know who came up with that one. Who wants to buy at the high of the year? That's when you're supposed to be selling. You buy low, sell high. Not the other way around. Next. VYM. What the heck is VYM? VYM. Vanguard. Yeah, no. Again, the high of the year and a monthly. No, thank you. Philip Morris. Ooh, this is a good one. Here we go, Philip Morris. No, it's at the high of the year. Uh-oh, Target. We talked about this one last night. Target. TGT. Now, there's something about Target you need to know before you jump into Target. Now, there are a few other companies just like it. I'm going to explain it in a second, but before we do, high, low, where was it? Where is it? What direction is it going? Up, down, sideways, down, up, 130. The 130 is going for 275. That's over 2%. Simple, right? 1% is $1.30. It's $130 stocks. You move the decimal point over two places. $1.30 on a $130 stock. Simple. Okay, the 130 is going for 272. That's over 2%. Okay, so do I like it? Well, high, low, all that kind of nice, neat, fun stuff. A year ago, Target is at 150. The high of the year, 181. That was back in late March of last year. Well, here's the bottom right here. In November, the middle of November, at 120. Now, what is that I'm looking at right here? That's a huge gap. Not a huge gap. There's a huge gap to a point that they call it a black swan. Because where it is so large, from 156 all the way down to 120. That's a $30 drop. That's a big drop. Okay? So why do they call it black swan? Because they don't happen all the time. And you don't see that many. I mean, think about it. How many black swans, real live black swans, have you actually seen? Not many. It's like a white alligator. Have you ever seen a white alligator? I've only seen one. Too much ginger in that tea tonight. All right, so here's what you're going to look out for Target and some other ones. I'm going to close this out for a second. Now go to right here. Here's the chart for the year. Now, something I want you to point out to you, see if you see it. Black swan, black swan, black swan, black swan. Guess what's coming up next? Now, what did you notice about them? Earnings, black swan. Earnings, black swan. Earnings, black swan. Earnings, black swan. Here's the dividend. What's coming up next? Earnings. Earnings is coming up next. Is there going to be another black swan? Well, maybe there will. Maybe there won't. That's not a ride I want to go on because I got burned 2 years ago on Target. Okay? I bought Target at 135. It dropped down to 102. I kept it at 102. And then I sold covered calls at 110. From 102, I sold the 110s. That way I'm bringing in something. And then that little sucker jumped up. Black Swan, 16 points to the upside. And I was at the wrong end of that 16 points. So I lost $12,000 overnight because I didn't know some things that I know now. Because had I known then what I know now, I wouldn't have lost that money. Okay. But yeah, every once in a while, you're going to find a company that has high susceptibility to black swans and earnings times. Target is one of them. So hopefully right there, that saves somebody a bunch of money. Let's get out of here. Alrighty, so the last 30 days for Target. Look at that. 30 days ago, we're at 33. Jumped up to 144, drops down to 127. 1, 2, 3, 4 days to the upside. You know what's coming next. That baby's going to jump up. Or a black swan is coming. And when a black swan comes, you don't know which direction it's going. All right? So, just be leery as a black swan possibility that's coming. Because the earnings report should be coming up soon. Okay? Dividend, earnings. Dividend, earnings. See? Dividend, earnings, black swan. Dividend, earnings, black swan. Dividend, where's the earnings? Yeah, right there. See, green, blue, red. Okay, black swan. Dividend, earnings, conference call, black swan. Here's the dividend. The dividend's already been paid out. So the earnings call's coming next. Okay, when is it coming? Well, let's find out. TGT. And, okay, the dividend was the 12th last week. Where's the earnings? Where the hell's the earnings? There it is. The earnings. March 25th. And they're going to have earnings in the morning on the 4th, which is 2 weeks away. So we'll have to keep our eye on that one. So I probably wouldn't trade that one. That only gives me 2 weeks to play that. And if a black swan pops up, I'm sucking wind. Let's go back to here. All right, there we go. So at least keep on rolling. Okay, what is next? Caterpillar. Ooh, I love Caterpillar. CAT. Caterpillar. Here we go. High, low was, is. Look at the direction. Up, down, up, down, up, down. 356. 355 is going for more than 1%. That's a yes. So what does Caterpillar look like? All right, a year ago, we were at 314. The bottom of the year was in the beginning of August, and that was 308. Well, last 90 days has the high of the year right there on the 7th of November. Okay, 90 days. High, low, where was it? Where is it? Look at the movement. Up, down, up, down. Now, we're going to say no to Caterpillar this week, but we're going to keep our eye on it because 30 days ago was a 30-day high, and today is the 30-day bottom. Now, is it the 30-day bottom? We don't know, because tomorrow it could go lower. Now, even though today was an up day, okay, she opened up lower than yesterday's close, but she finished off higher than the open. All right, so it's a green day, but it still made a lower low and a lower high, okay? So we're going to say no to Caterpillar, but we'll put Caterpillar on for next week. CAT. All righty. Next on our list, MCHP. What the hell is that? MCHP. Microchip Technologies. Interesting. Why do I feel this is a no? All right. All right, we're going right to Yahoo Finance. Now, I would suggest everybody come up with some type of financial website for you to get your financial information. I like Yahoo Finance. Okay, I'm going to go to historical data because I want to see how much dividends this company has been paying. 44. We're going to reboot in a couple of seconds. Okay, historical prices. I want to see dividends only. See all the dividends. All right, we're going to say no to this one right off the bat. Okay, so here's why. Here's 20 years ago. Okay, 20 years ago. Here we go. 2, 3, 4, 5, 6, 8, 10, 11, 12, 13, 14, 15, 16, 17. Now look at the 17. Okay, May 8. Okay, 9, still at 17. 10, still at 17. 11, still at 17. That's 3 years in a row. No increases. No consistent profitability. So, all right, that's 3 years in a row. So 2012 is at 18. 2013, 18. 2014, 18. 2015, 18. 2016, 18. 2017, 18. 2019, 18. 2020, 18. 2021, it moves up. 7 years, no increasing. So how can you be reassured that the company is going to be consistently profitable when they went 3 years without an increase, which means they didn't make profits in those 3 years over and above the previous years? I mean, higher and higher profits. Okay, so if you're only making $100 every single week and you're not increasing, you're not getting any better, well, no. Okay, it stayed at 18 for 7 years. No, sorry. That's probably why I've never heard of it. It's not a consistent, profitable company, in my humble opinion. All right, let's go back to it, though. Here we go. Here's the high of the year. Here's the low of the year. Last 30 days. Yep, there's going to be some profit taking, more than likely. Going to drop back down. So, MCHP. Next on the list, Micron, MU. Okay. High, low, where was it? Where is it? Look at the movement. Up, down, sideways. Now we're at 104. The 104 is going for 320. Well, that's over 3%. Well, that's the second stock we've seen over 3%. Micron. So the question is, do you like Micron? All right, we're at almost 11 o'clock. Let's take a look at some more of these questions. Which stocks give me dividends every week? Okay, Laura, aren't any. You steal. You see that? Did you say? No, I said U.S. Steel. Mr. Premium of the option. Macy's, Altria, Ford, and Wells Fargo. Ooh, nice set. Macy's, WFC, Wells Fargo, Ford, and Altria. Okay, interesting. Let's go to over here. Austin, we look at WTGR. That's a no. I gotta go through all these questions. Here we go. Where did you join the group? Saw that one. 21 years till retirement. Holy cow. That's a long way away. 21 years to retirement, Austin? Drusilla called, you have to own. Yep. So Magnus DVN. How do you figure out profit and loss? Nope. Dump. Following week. Tell us about your meeting room Discord. Okay, Wallace, I do have a Discord, okay, and there are a bunch of people on there. Some of them know a hell of a lot more than I do. They do trades that I don't do. Me, I like simple, safe, predictable, and consistent. some of the guys in the Discord, well, they do a lot different trades than me. Okay, now I do some other ones there. Because does the volume of the stock matter? Yes and no. Okay, number one, if you're looking at a company that's over 20 years old and it's consistently profitable, you're not going to have an issue with volume. Hog EX date next Friday. All right, cool. I actually have a bunch of Harley Davidson, more than I'd like to have. Now, the funny thing about Harley Davidson is that the millennials and Gen Z, they don't want Harleys. Isn't that weird? Okay, see, the Gen Xers, that's my generation, and the baby boomers, well, we love Harley Davidsons. We want to jump on that bad boy and go for a ride. It's the whole attitude. Okay, millennials and Gen Z, they don't see it that way. So I want to get rid of my Harley Davidson stocks. All right, not fully visible. Please show us losing trade. We already did that. WGR, BMY. Felix wants to take a look at Bristol Myers Squibb, BMY. Interesting. Let's take a gander. Now, Bristol Myers Squibb is a company that's over 100 years old and has consistently increased its dividends consistently. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. Right here, what's happening? 55 is going for 78. Well, that's a nice number. That's what we like. Okay, so a year ago, we're at 50. In July, we bottomed out, the beginning of July at 39. Well, look at the last 90 days. Same thing. High, low, was, is, up, down, up, down. She's turning around right here, actually making a turn up. Here's your 30-day high. Drops down. Here's your 30-day bottom. She's turning around, going back up. That's exactly where I want to see companies. Okay, last 30 days. $30 days ago, here we are, 57. Jumps up to 61, drops down to 53. Now we're at 55. Okay, it's going to the upside. So what I haven't shown you tonight is the seasonality chart. Now, if you're not familiar with the seasonality chart, all the way to the left is January 1st. All the way to the right, December 31st. I put my fan on. All right. I needed some air movement. It's getting a little warm in here. The blue line represents the movement for this year. You see where we are right here? That blue dot represents today. Now, the red line represents 10 years worth of data. That's 2015, 2016, 17, 18, 2019, so on and so forth. The last 10-year average movement. Here it is. Down, up, down, up, down, up. So right about here is where we are now. I want to see what's happening here. So I take my cursor, bring it right onto that dot, left click, drag right. And here we go. The next couple of weeks, here's where we are now. She's going to go sideways for a little bit, and then she's going to slowly drop. So that's historical performance. That's what it's done over and over and over again over the last 10 years. Does that mean that's what it's going to do now? Doesn't mean that at all. It just gives us an idea of how the stock is affected throughout the year. All right, so let's get out of that one. And move on to the next one. So I like 2 days to the upside. The bottom is right here, yesterday. Today is the first day to the upside. Now the numbers work, okay? But I want to see where she opens up tomorrow. If she opens up higher tomorrow, 30-day high, 30-day bottom, bounces back to go to the upside. Stocks go up, stocks go down. Okay? This could be the bottom right here where she just keeps on going up. Now she's only going to go up for a short period of time because that's all they do. See? From here, from 56 to 61, that's a $5 move, 10%. Okay, from 61 to 54, that's a $7 drop. 7 15. That's about 15%. A 15% drop. Okay, so big drops like that and big jump ups, you gotta expect some kind of reversal. Okay, Goes up 10%, reverses, drops down 15%. Now she's going to reverse and go back up again. Steve, the stock is very deep in the money. Is it best to roll it into the next week? So far, collecting more premiums, and he most likely to get called away. Now, Steve, we can take a look at that. We can take a look at that tomorrow morning. Oh, wait a second. Is tomorrow Thursday? Yeah, tomorrow's Thursday. We can look at it tomorrow morning in the morning trading group. Okay, so bring that up tomorrow morning. We'll take a look at it and we'll answer that question. It's easier for me to answer it by seeing exactly what I'm looking at. Okay, I want to see the chart. I want to see the numbers. Because there's not very much in the text here that you can actually paint me an interesting picture. All right, let's keep on going. IM shows up. Thoughts on KKR? Oh, Austin, WTRG. All right. Top Dat Baby, NOBL. What the heck is NOBL? NOBL. Oh, no. Simple, right? That was quick, right to the point. No ifs, ands, and buts. No. I don't do monthlies. The numbers don't work. It's just a waste of my time to try to explain to you why it doesn't. It just doesn't. All right, WTRG. All right, WTRG. WTRG. No. Austin, you made me go through all of that and you knew it was a monthly optionable stock? No, dude, I don't do monthlies. They just don't work. Buy and hold wants to take a look at Merck, MRK. Love Merck. Ooh, look what's happening here. The low of the year, and it's bouncing off of the low of the year. Okay, first look. Takes 3 seconds. It should take you 3 seconds to look at a chart. Because remember, we're looking at 5 things. High, low, was, is, and the direction. Not that difficult, and it should take you 3 seconds. All right, so it doesn't look that bad because it's bouncing off the bottom. All right, so what do the numbers look like? 86.58. The 86s is going for 128. That's almost 1.5%. All right, so 1.5% sounds good. A year ago, we opened up at 128.15. The high of the year was in June at 135. The last 90 days, you ready? Same 5 things. High, low, where was it? Where is it? Look at it. Down, sideways, down, up. Okay? Down, sideways, down, up. Not that difficult. Now we want to take a look at the 30-day chart, because the 30-day chart is going to give me a good idea of where do I think it's going to go next. And by looking at it, you should be able to see it within a second or two. Okay, because remember, we're looking for the same 5 things. You ready? The high, the low, where was it, where is it? Look at the motion. Up, gap down, keeps on going down, and then it moves back up again. See? Up, down, up. Not that difficult, right? So, the current price, 85.60. The 86s go for 128. Let's do another sample so you get a good idea of it. You ready? Here we go. Let's get rid of this. The 85, the 86s. All right, we want to look at the 86s. All right, let's get rid of that. The 86s right here. Here's the covered call right there. See? Covered stock. Okay. The 86 right there. That little tiny square opens up and it says buy. So we want to buy that one. And this pops up. Now, it's set as default for 1,000 shares. Now, I could do 1,000 shares, but that might freak out some people. So let's do it just for the fun of it, because I want to see how many people freak out about this. Okay, 10 contracts. You ready? 84,000. But you're making 1,700. So 1,700 on 84,000. Okay, clear this. 1745 divided by 84,261, 84,261. Comes to a grand total of 2.07. All right, so let's change this for a second and see if you guys grasp this. Let's get out of here. Well, let's change this to one contract. Okay, just one contract. Okay, confirm and send. There's the profit, 174. Clear that. 174. What am I paying? 84.26. 84.26 comes to a grand total of, oh, look at that, 2.06. So whether I do 100 contracts, whether I do 5 contracts, whether I do 1 contract, it's still going to come up to 2.06%. The percentages doesn't change. I don't tell people what I make on a weekly basis money-wise because not everyone has the same ability to have the same amount of investment capital. Okay, so if you have $5,000 or $10,000 and you're just starting out, well, 1% is still 1%. Okay, you're going to double your money in 14 months. If you have 200,000, well, it's still going to take you 14 months to double your money. Even if you have $1 million, it's still going to take you 14 months to double your money. 1% is 1%, no matter how you look at it. It just is what it is. 39. I'm going to reboot this thing. This is crazy. So guys, don't go away. Whoops. Don't go away. We're going to reboot. This is crazy. Okay, so guys, don't go anywhere.
Internal revenue.
Okay, try it one more time. And here we go. All right. Try introducing members, badge, letting viewers know. Okay. All right, well, let's give it a try. All right, so we're going to go a little bit later tonight only because I'm rebooting and let's just get it started all over again because I don't like the way it does that. It is what it is. All right, so no matter how much you have to start out with, 1% is 1%. You're going to double your money. It's going to take 14 months. It's still going to be the exact same. Okay, so I don't give numbers. I'd rather give percentages. It makes it easier for people. People can understand 50% a lot easier than they can think, all right, well, if he made 10,000, how much did he have? What about now? 1% is easier. It's easier that way. Alrighty, next on the list is going to be TLF. What the heck is TLF? TLF. Who came up with that one? No options, no thank you. Ooh, TOL. Toll Brothers. I like Toll Brothers. Okay, so here we go with the Toll Brothers. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down. It's going to be a no this week only because of that big drop. See that big drop right there? Okay, this big gap down. But we are going to keep our eye on it just in case she bounces up. So I'm going to write Toll Brothers for next week. TOL. ASTS. ASTS is next on the list. ASTS. Okay, interesting. I'm having a difficult time with this one because we're at $2 or $3 right here a year ago. There's no possible way at $2 or $3 this thing could have 20 years of consistent increased profitability. Maybe. I seriously doubt it though, because from here to here, look at the movement. It's at $3 and it jumps up to 40. Well, that's huge. But from there, she drops back down. Now she's at 20. All right. So what does that mean? No. That's what it means to me. CEG. CEG. Oh, Constellation Energy. Oh, no. All right, so here's the last 30 days for CEG. Look at the numbers. Okay, AG wants to take a look at SMX. What the heck is that? AG, hold on a second. So Constellation Energy, 350 is the high, 260 is the bottom. That's a $90 difference. Up moving? I don't know. Looks like there's going to be profit taking on that one. It's a little rich for my blood. So the 321, the 320s are going for 12, the 322s are going for 8. That's over 2%, if it makes sense to you. Well, what does it normally do this time of year? I don't know about you, but, going to go sideways for about 2 weeks. And then the month of March, she's going to start going up. All right. But do I really want to buy a stock at $300 a share? I don't know. I'll write it down because it doesn't look that bad. It's over 2%. But if I can get 2%, if I can get 2% on Macy's, and Macy's is only $15, why would I want to pay $321 for CEG and still get 2%? I don't know. Okay, AG wants to look at SMX. SMX. I'm not 100% sure. Oh, hell no, brother. Come on. At $3.22, and it has no options? Yeah, no. Sorry. Alrighty. Okay, we looked at that one. Next on the list, SMG. 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 No. Who came up with Scott's Miracle Grow? SMG. Yeah, no. NBUS. 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 Can't find that one. That's a no. DraftKings hasn't been around for 20 years yet. Sorry. ATYR. What the heck is that one? ATYR. No, it's a monthly. Sorry. DKNG. RXRX. Pharmaceutical company. Well, let's check that one out. RXRX. Well, let's see how wonderful RX is with their dividends. Hold that thought. Okay, unfortunately, Megan Smith, RXRX, there are no dividends at all. So why would you come to a dividend show that has no dividends? Okay, Chet Donnelly, DraftKings, not old enough, still juvenile. Sorry. Bubecker, Tesla, sorry. Tesla has no dividends. Remember, this is a dividend investing channel. If the company has no dividends, it's automatically going to be a no. Can you do Rocket Labs? No, Rocket Labs doesn't have 20 years of dividends either. FIS? What the heck is FIS? Joe, FIS, huh? FIS. Fidelity National. FIS. Okay, I might cut some slack for FIS. Check out the numbers. 2004 was 5. 2005 is 5. 2006 it's 5. 2007 it's 5. 2008 it's 5. Okay, so this thing went 5 years without any increase in profitability. Not quite sure, FIS. Okay, 2008 still 5. 2009 still 5. 2010 Okay, so it took 7 years for them to increase their profits. 7. No profitability in 7 years. Yeah, I'm going to have a problem with that one. All right, so 2012 was at 20. It went to 22, to 24, to 26, to 29, to 32, to 35, to 39, to 47, to 52, to 30. Whoa. They cut the dividends in 24 from 52 to 36. At 16. It's about a 30% drop. Now, taking a 30% pay cut, that doesn't thrill me. So I'm going to say no to FIS. What's going on here? All right. Here's a 30-day high, 30-day bottom. It's still coming down. Now, FIS it's just not working. Robert wants to take a look at Altria. Way to go, Robert. Nice. The high, the low. Where was it? Where is it? Look at the movement. Up, down, up, down, up, down, up. 53.50. The 54s. No. The 53s. Take out 20. Okay, you might do the 53s. Okay, so if I buy it at 53.50, okay, and I sell the 53s, you take off that 50 cents, you're walking away with not 1%. Sorry, no to Altria this week. Hi, I'm new to the page. Do you only do 20-year companies? HH. Every once in a while, I will throw something in that doesn't fit, only because there are other investors that I respect. Now, take for instance, Apple. Apple does not fit my parameters because it doesn't have 20 years of increased dividends. But Apple is on Warren Buffett's list. Siri is on Warren Buffett's list. There are other stocks that I trade that aren't on my list, but on someone else's, kind of like Warren Buffett or John Templeton or someone else that's a better trader than me. All right, let's keep on going. Hopefully that answered your question. All right, Chet saying stay away from biotech. Thanks, Chet. But Chet, here's the thing. If the company is 20 years or older and has 20 years of increased profitability, well, then it's going to be a maybe. But for the most part, biotech's not that old. Oh, user 6569 wants to take a look at Nucor. N-U-E. Oh, no. It wasn't that quick. It didn't take long to find a no there. Well, here's the reason why. Look at your 30 days. 30-day bottom here, 30-day top. I don't buy at the 30-day top. I wait for it to come back down, turn around, and then go back up, and then I'll take a look at it. So I'm going to put Nucor, N-U-E, for 2 weeks. So I think it's going to take 2 weeks for it to drop down. N-U-E, that works for me. ARR. What the heck is ARR? R. No. Okay, who said that one? Ron. No. How's that one, Ron? Okay. Monthly options don't work to get weekly cash flow. You can't get weekly cash flow from monthly options. Sorry, Ron. Boot Baker. Okay, I told you this before. No to Tesla. Skyworks. Okay, happy person. Skyworks is not 20 years old. Okay, user 6569. IRM. Okay. Iron Mountain. IRM. Iron Mountain. Let's see what the dividends look like. All right, 75, 65, 62, no shit. Okay, 2010, not quite 20 years. Only 15 years. Okay? 6, 17, 23, 25, 44, 48, 49, 55, 59, 61, 62, 62, 62, 72. Okay, but it's only 15 years. So, ask yourself the question, are you okay with only 15 years of profitability? I like 20, but 15, I don't know, I could squeeze it in. Let's take a look. No. Sorry. High, low. Is today the bottom? No, we don't know, because tomorrow it could be lower. It could be even lower on Friday. We just don't know. So we will put it down for next week. Keep our eye on it. IRM. Okay. Chet wants to take a look at Costco. Okay, Chet, I can tell you right now, no, only because it's out of my price range. And it's at the high, close to the high of the year. Okay, I don't do stocks over $1,000. This doesn't make sense to me. So if I can get 1 to 2 to 3% on a $20 or $30 stock, why wouldn't I? Okay, because it's a lot less of a fall from 1,000 as opposed to a $5 or $10 stock. Jack Vanderloo, you're new here, I can tell. Do you know how I can tell, Jack? Because you're asking about JEPQ. Now, Jack, I want to show you something. Now, you're new, so I'm going to cut you a little bit of slack. JEPQ. Okay? I got a whole bunch of reasons. Now, Jack, I haven't done this all night, so I've been excited to do this. You're the first person I get to pick on for the night. You ready? Hell no to JEPQ. I got a whole bunch of reasons. Reason number one, it is a monthly optionable stock. The numbers just don't work in a monthly optional stock. No possible way to get weekly cash flow from a monthly optional stock unless I'm sitting in front of the computer every single day. Hell no, that ain't happening. Reason number two, it's at the high of the year. I never, ever, ever buy something at the high of the year. It's never been to 60. What makes me think that if I buy it, it's going to go up to 60? It's never been there before. I'm not a trailblazer. I'm not looking to create new highs in anything I buy. All right? That's reason number two. Hold on. It gets worse. I've been waiting to say that all day. But wait, it gets worse. All right, so went to Yahoo Finance, JEPQ. Okay. Now, let's take a look at the dividends for JEPQ. Now, remember, what we're looking for specifically, 2 decades of increased dividends. Is that my imagination, or does that say June 2022? Okay, see, where I went to school 20 years ago would be 2005, not 2022. So, no. Okay, but hold on. Okay, it's only 3 years old. It's like throwing the keys to your Lamborghini to a 3-year-old. Yeah, that doesn't work. Not for me, anyway. But hold on. It actually gets worse. Believe it or not. Let's go to the summary over here. The summary. That's going to give us some detailed information on numbers that we want to see. Come on. All right, here we go. J.P. Morgan. Wait. Here it is right here. Oops. J.P. Morgan, NASDAQ Equity Premium Income Electronically Traded Fund. You're giving your money to a computer to trade for you. Now, you can give me a load of bullshit saying the ETF stands for Exchange Traded Funds, but if you haven't actually seen one of these exchanges, you'll see a whole shitload of computers. And computers run on electricity. Electronically Traded Fund. That's what it is. But, here we go. You ready for this? Okay, the yield, 9.47. The company's only 3 or 4 years old, and it's only giving 9.47 per year. Now, I'm looking at 1% every single week. And I know I didn't go to college, and I have to apologize to some of you. I'm not as educated as you would like me to be. But even for an uneducated man like myself, I do know that 52% a year is a hell of a lot better than 9.47. Okay, I didn't go to college, but I do know 52% is better than 9. I know that. All right. So no to JEPQ. All right, let's go back to here. Oh, Armor Residential, ARR. ARR. Here we go. No. Sorry, Ron. Okay? There's no way you are getting weekly cash flow from a monthly optionable stock unless you sit in front of the computer all day long. Buy and hold wants to take a look at Hershey. HSY. Ooh, lovely. Look at that. High, low. Where was it? Where is it? Look at this. Sideways, up, down, up. 164. The 165s are going for 155 and 2. The 162.50. Yeah, you're going to get your 1% out of Hershey. Okay. A year ago, we're at 193. The high of the year, 212. And that was in the middle of May. Last 90 days, same 5 things. High, low, was, is. Look at this. Down, up, down, up. Easy breezy, right? Last 30 days. I don't know. I don't like buying at the 30-day high. Okay, 30 days ago at 154, we dropped down to 140, shoot up to 163. Here's where some math might come in handy. From 140, the low, to 163, that is $23 move. So that's about a 17% move from here to here. And if you think there's not going to be any profit taking after 17% jump up, look at it, gaps up and it keeps on going. Well, it's over 15%. 17% is over 15. Yeah, there's going to be profit taking. It's going to come back down. Terribly sorry. Not this week. Peter wants to look at GROW. GRO. I don't know why he wants to look at that. Hell no. That was quick, wasn't it, Peter? Hell no. It doesn't fit. Oh, user 7620 wants to look at University of New Hampshire. Yeah. Now, wait a minute. Didn't University of New Hampshire have... Does it have 20 years of dividends? UNH. Okay. Let's look at the historical data because we want to see how many dividends this thing has. Okay, historical prices. Come on. Dividends only. I will look at all the dividends. Wow. There we go. All right, 2005 is 20 years ago. Let's check it out. 2, 3, 13, 16, 21, 28, 38, 50, 63, 75, 90, 108, 125, 145, 165, 188, 210. Oh, hell yeah. Looks like University of New Hampshire does have 20 years of increased dividends. All right. All right. A year ago, we're sitting at 521. That's probably why I've never traded it. I don't do stocks over 250. It's at 521 a year ago. Okay, in April, it bottoms out at 435. And then in November, the beginning of November, okay, last 90 days, there you go. High, low, where was it? Where is it? Look at the movement. Down, up, down. Now it's at 511. Well, the 510 is going for $9. Well, that's just shy of 2%. If you like UNH. It's not University of New Hampshire. It's United Health Group. Okay, I like saying University of New Hampshire because I'm from New England. Okay, and they always had these University of New Hampshire, what do you call those things? Ads? The news. All right, anyway. Holy cow, we got 3 minutes left. Let's keep on keeping on. Here we go. Last 30 days. Okay, 30 days ago, we're at 515, jump up to 555, drop down to 5. That's a 10% drop. Okay, so today we have a higher low, not a higher high. Okay, it's not that difficult. Okay, higher high, higher low. Okay, so could today be one step to the upside from the 30-day bottom? Could be. Okay, take a look and see tomorrow. Does it go higher? Well, we'll find out. All right, let's take a look at these questions. Dollar General, great. AT&T, no. Only reason AT&T is a no, it's at the high of the year. No, sorry. Dollar General. Ooh, I like that. Look at that. High, low, is. Look at the movement. Up, down, sideways. 75. The 76s, 173. That's over 2%. Let's take a gander. A year ago, 143. The high of the year, 169, and that was in the middle of March. Last 90 days. Okay, the last 3 months, last 90 days. High, low, where was it? Where is it? Look at this. Down, up, down, up. Okay, the last 30 days. Is it a good thing to jump into? Okay, 30-day low, 30-day high. Bye-bye. I don't buy at the 30-day high. I don't. If you want to, that's up to you. Because when you're going from 68 to 76, that's 68 to 7. That's like 11%, an 11% increase. More than likely there will be profit taking, but we don't know. United Healthcare, UNC. No options, no thank you. Sorry. I'm new and I don't know why I'm seeing this video. Maria, how are you today? I have no idea why you're seeing this video either. Maybe you have an interest in investing your own money. Maybe you have an interest in something different, something new, something borrowed, something blue. I really don't know. But, welcome. Thank you. Emerson, EMR. Emerson Electric is over 100 years old. 124. It doesn't look very favorable at the moment. Look at the last 30 days. Okay, here's your last 30 days. 30 days ago, 127, jumps up 132. Okay, not quite the 30-day bottom. Okay, today, but still, you cannot not see that. Okay, it's going down. It hasn't found the bottom, turned around to go back up yet. So I'm going to write it down for next week. EMR. Maybe it will. Okay, we already looked at target. 3M. Nope. Too close to the high. See it? Okay. 30 days ago, here's the high. Yeah, no. See, it's pulling down. It's not quite there yet. HMAX. Shelby, what the heck is HMAX? HMAX. Yeah, no options, sorry. He's comparing apples and oranges. It's not an individual stock. Okay, Rizzo, I gotcha. How are you getting 52% per year? Britain, how are you today? Okay, so Britain, the answer to your question, okay, how am I getting 52% a year? by obtaining 1% every single week. There just so happens to be 52 weeks in a year. So if I get 1% this week, 1% next week, 1% the next week after that, well, that's over 52% a year. Simple interest. Compounded, it's actually 74% per year. But I don't want to say 74% per year because people panic when I say 50%. I say 1% and people say, yeah, it's boring. Well, it kind of is. But 1% every week comes to over 50% per year. All right. Can you drop us a recommended stock at the end of the show? Okay, user 86695. I don't make recommendations. It does nothing but get me in trouble. Okay, but if you have something in mind, I'll take a look at it and give you my opinion. See, opinion, I have a lot of those. Recommendation, I don't have any of those. My recommendation would be do your own research. What's your opinion on gold? Would it rise, or is it going to revisit lower amounts? How much money do you make on this? I make over 1% a week. DG, no increase in the dividends for a while. Yep, I saw that one. Are you rich, buddy? Yes, I am, but it all depends on what your definition of rich would be. Okay? Where can we find your rules for potential stock? Oh, Joe, the rules for potential stock. Are you ready? It is so simple. There's only two. Number one, consistency of profitability. Bare minimum 20 years of consistent profits. That's it. And two, weekly options. Okay, now we checked the other day, 9,916 different companies you can invest in at any moment. Out of those 9,916, only about 300 actually are consistently profitable for at least 2 decades and have weekly options. Thank you for what I do. Who said that one? Reborn, you're welcome. IEP, oh, that's iCard. Yeah. Take a look at the dividends. Okay, user 8669. Okay, IEP, seriously, take a look at the consistency of the dividends that they pay out. The yield is a little on the high side only because the dividends consistently decrease over time with IEP. Yeah. ITW, Illinois Tool Works. ITW. Sorry, it's a monthly. Okay, February, 21 February, 21 March, 20 June, 19 September, 19 December. That's a month. Monthly. You cannot make weekly cash flow on a monthly. Can't do it. Okay, 6569. We already looked at Caterpillar earlier today. AIPI. What the heck is that? AIPI? It's a no is what it is. Okay, Shelby. AIPI. Monthly. Same thing. Prudential. Caldwell Cutie. Give me the ticker symbol for it real quick. Can you tell me your thoughts on GEHC? GEHC. Okay, let's take a look. Okay, $92. GEHC has weekly options. Wonderful. GEHC. Well, let's see how good they have dividends. Okay, because that's what I'm looking for. Okay, 3. Yeah, no. Okay, so GEHC. I don't know who asked for this one. 3 cents, 4 cents. 2 years of dividends? No, sorry. PRY. Okay, PRY, Prudential. PRY. No, that ain't it. PRU. PRU. Okay, sorry, kiddo. Monthly. You've been here long enough, Caldwell Cutie. Okay, you and I even had a couple of conversations on the phone. Okay, you should know I don't do monthlies. The numbers just don't work. Talinda Gill, HXG. Is that right? Oh, HXQ. HXQ. What the heck is that? Oh, it's a no is what it is. Damn autocorrect. Thoughts on HXQ? No. Okay. So apparently, that's it. We are past 11:30. Answered all the questions. I didn't know they were monthly. Oh, Carter. CURLF. CURLF. Dude, come on. There's no options at all. How can you make a weekly cash flow on a stock that looks like this without having to sit in front of the computer all day? Sorry, that's not what I want to do. All right, it's past 11:30. We're going to do this exact same thing again tomorrow night, 9 p.m. Eastern Standard Time. It's usually around 9:15 Eastern Standard Time until 11:30. You guys all have a great night. It was nice seeing you all, and see you again tomorrow. That being said, you guys have a great night. See you again. You're welcome, Michael. Michael the Cleaner. And you guys over here, thank you for your knowledge. You are welcome, Sam. Hope to see you again.